Alright, so talking about the OCC ARM rule coverage, national banks. OCC ARM loans are loans made to finance or refinance the purchase of and secured by a lien on a 1 to 4 family dwelling where the lender has the right to adjust the rate of interest periodically. No principal dwelling limitation, as with Reg Z ARM rules. ARM loans do not include fixed-rate loans where the term is shorter than the amortization schedule. They may be open or closed-end. State banks may make ARM loans that comply with this regulation if the bank is located in a state that prohibits ARM loans. Requirements. National banks and their subsidiaries are authorized to make ARM loans without regard to state law limitations on such loans. National banks may purchase or participate in ARM loans that do not comply with this regulation except from the bank's affiliates. And for loans subject to both the OCC ARM regulation and Reg Z, that is, loans made to an individual for personal purposes secured by a principal residential dwelling and have a term longer than 1 year, the index to which the interest rate is tied must be specified in the loan documentation, readily available to and verifiable by the borrower, beyond the control of the bank, and a single value of its chosen measure or moving average of the chosen measure calculated over a specified period. For loans subject only to OCC ARM regulation and not subject to Reg Z, that is, loans for business purposes, rental property, or personal vacation home, a bank may use the index it chooses. Rate changes. A national bank may decrease the interest rate at any time and increase the interest rate according to the terms set forth in the loan documents specifying amount, times, and circumstances of increases. Prepayment fees. National banks may impose fees for prepayment regardless of state law limitations. Prepayment does not include payments exceeding the required payment amount to avoid or reduce negative amortization, principal payment, or principal payments in excess of those necessary to retire the outstanding debt over the remaining loan term at the then current interest rate that are made in accordance with the rules governing the determination of monthly payments contained in the loan documents. CFPB Reg D. Federally or state chartered banks, thrifts, and credit unions or other state licensed lenders who make or purchase alternative mortgage transactions. Alternative mortgage transactions means a loan, credit sale, or account that is secured by a 1 to 4 family residential structure, whether or not attached to the real estate, made primarily for personal, family, or household purposes, and in which the interest rate or finance charge may be adjusted or renegotiated. Requirements. Interest rate increases. A lender that makes an alternative mortgage transaction with an adjustable rate may only increase the interest rate or finance charge as follows. If the transaction is a HELOC, the creditor must comply with the Reg Z limitation on rate chart changes. For other transactions, the lender must use either an index that is readily available and verifiable by the borrower and beyond the control of the creditor, or a formula or schedule that identifies the amount that the interest rate or finance charge may increase and the times at which or circumstances under which a change may be made. Renegotiable rates for renewable balloon payment mortgages. A creditor that makes an alternative mortgage transaction that has a balloon payment may negotiate an increase or decrease in the interest rate at the time of renewal only if there was a written commitment by the creditor to renew the transaction at specified intervals throughout the amortization period. A creditor is not required to renew the transaction if any action or inaction by the consumer materially or adversely affects the creditor's security for the transaction or the creditor's rights to the security. The consumer materially fails to meet the repayment terms, there is fraud or willful or knowing material misrepresentation by the consumer in the transaction, and the transaction is covered by the Federal Reserve Reg O and is therefore required to have the loan due on demand. See requirements for high cost and higher price loans. If an alternative mortgage loan is subject to Reg Z requirements for high cost and higher price loans, the lender must comply with those requirements. A creditor may decrease the rate on any alternative mortgage transaction at any time. Enforcement. There's FIRA penalties up to $7,500 per day for violations of laws and regulations. Penalties up to $37,500 per day if violations are unsafe or sound unsound practices, or engaged in recklessly or in part of a pattern of misconduct that causes more than a minimal loss to the bank or any pecuniary gain to the parties involved, and penalties of $1.375 million per day against persons who knowingly commit a violation or knowingly or recklessly cause a substantial loss to the bank or a substantial benefit to the parties.